You guys aren't going to let me live down the order filled. I won't trade during live streams anymore. Welcome everyone to the Kendall Report. It is Wednesday night. We had a good day in the live room yesterday, and markets just continued to climb higher all day. We had the worst PPI report ever in history, 11.2%, let's see if I get the right number, 1.4 month over month, and 11.2 year over year. So that just means this is going to continue to filter into the markets. Now, I saw reports that this was all priced in. That's why the markets were up. Makes sense, right? Somehow everybody knew everything that was going to happen. It's priced in, market rallies. It tends to, if you think it's going to go down, it goes up on these reports, right? So it's one of those classic events where you sell the rumor and buy the fact, right? That's the old adage. We did see also just crazy, terrible reports from the banks. All got hit. Financials were down big. Although 9 of the 11 sectors were up, financials weren't one of them. JP Morgan got hammered big time, and Jamie is not having a lot of nice things to say. Excuse me. It's just not a good time for the banks. But they had this really bad report, expecting things not to be so good. And what do? They take their money and buy back shares. Because if they didn't announce that, we probably would have been down maybe 5 or 6%, maybe more. It's just the constant buyback of shares is like the only corporate strategy there is anymore, and that's been going on for as long as I can remember, and I can remember a long time. And we're just seeing, I guess the best way to put it is that the stability that we're seeing in the markets is likely to continue. In the last 5 days, we virtually have traded in the exact same range. One day up, one day down. Looks like we're going to follow through. We don't. There hasn't been 2 days in the same direction for a while. It literally has been back and forth. We'll see if maybe we can get some of that to start to come into play. I'm going to go through a scenario, and I've been mentioning this, and I'll go through in the technical section here in a few minutes about a potential pattern. We discussed it briefly in the live room earlier today. So I'll go through that scenario. Not sure how plausible it is. We're literally in this no man's land where we're just in this sideways back and forth market. Looking to tomorrow, we got claims, continuing claims, just looking at a couple of things here. Nothing really going on. Also, we got this big inflation number. Yields go down. That makes sense, right? I think the reason why yields went down is that the bond market's is way oversold right now, and it's just starting to stabilize. I've been talking about that for the last couple of days. My expectations were that we would continue to move back toward maybe 2.55 on the 10-year, something like that. I'll show you in a minute. Yield curve is just vertically steepening. You don't see those headlines anymore, if you notice. Those are all gone. And so let's go ahead and just take a look at the database. A little bit of positive rotation. Shouldn't take us long to get through the broadcast tonight. There's really not a lot going on from the standpoint of what the configuration of markets or what they're telling us. So let's get it right into the database. So we're looking at the daily database. We're back over 42%. Managed to get a little bit of buying after today's rally. 43.01 bullish. 760 buys, 429 sells. Slight positive. We moved up from 41 and change to 43. So we're back above that metric. Is it material? Not really. I don't really see a lot going on here, but we are seeing stability, and that's what I'm talking about. And we're just not getting any follow through, and we're in one of those classic patterns that is very difficult to make the call. I'll do my best to paint whatever picture is likely to come over in the next couple days. So, but there's nothing really to talk about here. We're at Wednesday, so we're midweek coming into Thursday and Friday. So tomorrow night I'll go a little more in detail on the database and expectations for the rest of the week. I just bring up, this is the current activity in the S&P 500 futures. I just brought this up. These are the PPMs indicators The webs are up here, and we're seeing a little bit of a sell-off. I actually do have a little bit of a small short position on right now that I'm looking to see some numbers pull back over the next several hours. But we're looking at some downward projections. These are the indicators that I've been telling you about. And we've got a price projection right now on a 5-minute. This is a 5-minute on the left, a 1 minute on the right. And those arrows at the top are the pivots. So it's marking all the pivot points to trade off of, and where you can stop out looking at some of these patterns. But we're just seeing some drifting. This takes us back into that rally that we saw into the close. You'll see on the 5-minute chart over here where my cursor is. And then we backed off into the close and then just been kind of bouncing around since then. And we're actually, I think last I looked, we're flat on the session, actually, up 25 cents. So nothing really going on there. Let's take a look at the technicals here from the standpoint of what the market grid is telling us. The grid yesterday, we almost traded right to the S. We traded just above S1, but we made it almost to R3, 44.51. The high was 49.50, so we just about got there. For tonight and tomorrow, we're looking at S1 right now is 23, 44.23, R1 44.61, and I want to show you this range and this setup that I was talking about just a minute ago, so you can get a bit of a handle on what is likely here. And if we do not make a higher high than what I'm about to show you in the next probably 5 to 8 sessions, then we will revert. But I want you to look at just the PPMs here, and you'll notice that they are PPM 1 is up, PPM 2 is down, PPM 3 is up, and that's that really tells you everything you need to know about this market right now. It's in a complete sideways range. So just looking at this, probably S1, R1, maybe print 44.80. There is quite a bit of resistance between 44.60 and 44.80. When you look at the moving averages in the pattern, 44.77 is the 10-period moving average, 44.95 is the 21. So it's possible to trade up into that, and that would put us at R2 is 83. That would be the extreme. So S1, R2 is possible. Looks like we could have another positive session. And let's talk about this pattern, and I'll draw this in as quickly as I can and set up a couple scenarios for you. But I've been talking about this a little bit. This is basically a 1-2 pattern. This right here is 1, this will be 2, and then the potential is for a third wave up, and typically we'll get 1 and 3 equal. These lines that you see here in the dots, that is the Fibonacci projection tool. That's the one that we have that we're issuing out and distributing in TradingView. Same calculation. So what I'm looking for is this, is the potential. If we can we're going to have to close over these moving averages here, and then what we'll get is something that looks like projections that look like it come here. So we'll get 1, 2, and then we'll see what kind of projections we get. We'll also see what happens here with PPMs. If they all turn up and start to accelerate, then we could actually see a rally. And this very easily could suggest that we would see a all-time new high in this next pattern. I'm not really predicting that, really watching this pattern. There's another scenario that I want to paint out here, is sometimes we'll get this where the next leg is a muted leg. It's only like 0.83, 0.82, 382 times the length of this one, And so that would suggest that we make a slightly new high. We don't make any type of new pattern high or go into an all-time high any sort. I still think that scenario that I painted out a couple months ago, that we stay below 48.18 and above 41.01, we're just going to continue to go sideways in here. And if you look at this pattern, that's what we've been doing. There's been quite a bit of volatility. I talked about this bubble bottom. That's what it was. Now we're getting a little mini bubble, which suggests that we should at least retest this 46.27 high that we printed about 10 days ago. And that'll be the key. On the downside, the reverse is if we close below the 40-day moving average, it's going to be one of the simpler patterns to play, is that if we get below the 40-day, it's going to be that simple, 43.92. The last couple sessions here, we've not had a close. The average was 43.91. We closed 93 on the 12th. On Wednesday, we closed at, it was 90.56. We closed at 44.42, quite a bit above it. And we're likely to do that again today. And that's why you're seeing this PPM 3 down at the bottom starting to turn up here. And that is starting to suggest that all of the averages are going to turn back up, and we could see a rally. I just showed you that the database was back over 42% for what it's worth. We'll watch, see if we get any more traction, see if there's some higher prices that come in for the next couple of days in the market. But basically, we're in this sideways range. There's an upward bias for the next couple of days. Next market I'll cover is the NASDAQ. NASDAQ has a little deeper pattern, and we also are looking at the 200-day moving average as a resistance point on the NASDAQ. So there's a little bit more weakness in this pattern than there is in the S&P. Maybe that has to do with the relative level of the interest rates, but we look at that same. Let's do the market grid expectations first, and I'll show you that same pattern. This one, we've seen the same pattern set up before, and if we don't, like I said, if we don't make a new high over this, when we printed the 46.27.29 level on the S&P, this one's going to be 15,262. If we can't get above this high in the next 5 to 8 sessions, then we probably will turn back south here. But just like in the previous indicators, one up, one down, one up. It's almost exactly the same configuration. But let's talk just a touch more about this pattern here and what the expectations would be. And that expectation here, now all of a sudden, even if we got a 1 and 3 equal here, we're not likely to make a all-time new high up over here. So we're really just looking at probably a retracement. Like I said, we're going to know in the next week anyway, and I think I'll be able to determine sooner than that whether or not we're going to get any kind of real solid move to the upside and out of this pattern. Next market we'll look at is the Russell. Russell actually was able to move up to RXT 2019.85. The high was 20.28. We closed at 25. So we actually got an RTX sell signal. We should see it probably drift sideways looking at the cash here. 2034, maybe 2044 is going to be the higher end of this pattern. Definitely a different configuration on the PPMs, but still somewhat in a positive mode. But as I've talked about over and over, going all the way back to January, we've been basically in a sideways pattern here. There's been no real trending at all throughout most of this year. So we'll see if we can actually print up toward this 200-day moving average. Next, we'll look at the 10-year. 10-year was down, as I mentioned yesterday. We traded down to 2.68. The STX number was 2.65. We printed a low of 2.646, so basically printed RTX. The 10-period moving average 2.58, and that is going up at about 3 ticks, so it's going to be 2.6 as we come into Thursday's action. PPMs are still positive. They're starting to fade a little bit. They're losing momentum, but there's still a substantial amount of momentum. So if we did trade down to the 2.6 level, that level has about a 70% probability of holding from the standpoint of that pattern. If you do want to find out more about how these PPMs work, I did a masterclass live stream on Saturday. You might want to go watch at least that first section. I went through a lot of depth on the theories of what's going on there, and so take a look at that. But these patterns are still very solid. We still have upward fib projections up here at 313, 344. Those are still valid. I don't know if they're going to get hit within this sequence or not. It doesn't mean they have to. You can see where I'm moving my cursor over here where these fib projections are. We did not get hit in that period of time. So this is probably more of where the pattern's going to lead us down the road, but not right at this moment. Let's take a quick look at the yield curve. I want you to see that. You can see across the board, this is the 13-week 5. This is in the middle here is the 1030, and this is on the far right is the 530. 530s are back at 15 basis points. That's a big move. We were negative about 10 basis points. So this was a substantial move off of those lows. And like I've been telling you for a while here, is in order to get the yield curve signal about recession, you've got to stay inverted. You don't just print it and that was that signal and recession's coming. That's not how it works. We have to sustain those prices like that inversion, because that's what causes some of the disruption of money flow. Although just looking at the banks and how they reported today, there's no real big benefit that's happening here. I think a lot of people are blowing off this double-digit inflation number a little too quick, because I think this number is going to stay persistent. I joked on Twitter that first it was transitory and it wasn't. Then it was, and then we went into this next phase where it was going to peak and then it didn't. Now it's going to peak again, and maybe it does, but if it stays over a certain level, that's going to be all you're going to need to keep a lot of pressure in. This thing, inflation sucks the markets dry. Ultimately, it starts to challenge small businesses that don't have the pricing power of the big guys, and all of those things start to come into play. And we have another potential disruption. I don't know how far it goes or what it really means. I'm not sure. Probably there's people that follow it closer than I do that have a better opinion. But just this disruption and the shutdowns that are going on in China right now, that is a problem. Now, Shanghai is not big in manufacturing like Guangzhou and Guangzhou and some other areas. I've been to those areas in China, and when you go to an industrial area in China, it's mind-boggling. And I was there 20 years ago almost, so I can't imagine what it looks like now. But the bottom line is that you have to have this inversion stay for a while before it's going to have any real effects as we look forward. I haven't covered the Dow for a while, so I want to bring that up. We did print up over 100 the other day, and I think this is probably a climactic type move. We printed up and got to 100.52. We're back under 100. PPM1 is still only at a 0.14. So there's some potential to roll back in here to the 99 handle. So I think that was just an aberration. And I think it's going to continue to weaken in here, which is ultimately going to be good for gold. I'll go through gold here in a second. But the bottom line is that the Dow probably, that was a climactic move, I think, as far as the print over 100. Was some Fibonacci numbers that I talked about a while back at 102, 104 range. I don't see those in play at the moment. And depending on what happens over the next week or so, I'll be able to determine whether we're going to see another surge in the Dow. And I think this kind of goes hand in hand maybe with what's going on in the 10-year and seeing that stability happen. I think we're just going to stabilize in interest rates, and the Dow should, like I said, back up just a little bit more here. Next, we'll cover crude oil. As I mentioned, I thought crude oil would bounce back. It has. We're back at 103.50. I think it will stay over 100, probably under 106. 109 is going to be kind of the spike highs that we're likely to get to. We're looking at PPM1 starting to accelerate again, so there's some possibilities. I talked about these Fibonacci projections have been hanging out down here around the 200-day. I thought this little bubble bottom here on the, if you can see where my cursor is going here, that little bubble bottom was the low of this pattern. Let's go to the weekly very quickly. And that rising 10-week moving average is what's driving this. We're at 1.44 on PPM1, and the value of that average is 100.94. So I think we stay over 100, under probably the R1 number, which is, or R2, 105.11. So we probably stay between S1, R2 on the weekly crude oil. Next market we'll look at is gold. This is the weekly gold pattern. Has a very similar rising 10-period moving average through here. And this is always a very powerful pattern. The low 1935 is the 10-week moving average. If we look at the low for this week, 1942, high 85. So we're getting close to right now the R3 numbers 8770, RXT is 2000. I think ultimately this pattern, I'm going to draw in the swing pattern here very quickly so you can get an idea what this looks like. This is the potential. Right now we don't have the projection, but that's what I'm waiting for, is our projection tool to start to recognize this next level. And all of a sudden we're looking at all-time new highs, probably 21, 22 plus on the gold. Whether this is an inflation situation or what drives this, it's hard to make that call. But the pattern is very strong. I thought when we got up to 2077, that was too much, too fast. This is a much more methodical rally. There's a lot more substance and structure behind that. Those of you that have attended the live room know that I'm always talking about the structure around the markets. Sometimes that has to do with the webbing or the Wavetech webs and all that stuff. and that's all part of the indicator package. But this will help to identify these patterns. But this swing pattern, once we get that projection tool to start to recognize this pattern, we should see it go up pretty substantially over the next, I'm going to call it another maybe 3 to 5 months. Final market I'll cover is the Bitcoin. Bitcoin, this is a weekly, coming back into some resistance since this is a risk-on asset. 41,458 is the number right now. We're looking at the resistance on the 21, 43,464. Let me bring this over to a daily because I think that's where most of the numbers are showing up here. We're just about trading RXT 42,121, 41,458 last trade, R3 41,640. So we're almost at R3. These numbers will update here in a couple hours. PPMs are stabilized. We're still pretty negative here, but the resistance is up around 43 handle. So if we can stay positive, basically stay above 40,000 again, then we've got a shot at stabilizing, maybe setting up a new pattern that would indicate higher prices. Okay, folks, this is going to do it for the broadcast tonight. Thanks again, as always. Those of you in the live room, see you there at 1 o'clock. And if you want to join us, I'll put this up here. You can go to this link here. There should be a link in the description as well, and when the video repost, so you can go there and you can get into the live room and join us on going through indicators and utilizing everything and all the tools that I use and show you every night. So have a great night, everyone. See you in the live room tomorrow and see you on YouTube. And actually, I should tell you, I just realized this is the last broadcast for this week because there is no Friday. So, so I will see you on Sunday night, I guess. Wow, didn't realize that this was my last night. So anyway, folks, thanks for everything, and we'll talk to you soon. See you Sunday night. That's funny, William Mick. I just saw your comment.
Order filled.